Hi guys, Michael here. In this video I'm talking about some new data that just came out for the housing market. So if you own or are looking to purchase your next property, you need to understand this data and what is happening in the market right now because things are deteriorating rapidly. If this video brings you value, please like for the whole of the YouTube algorithm. And comment your thoughts below. What do you think is going to happen to the Australian property market? And subscribe for more awesome content on personal finance, savings and investing. Let's get into the video. So the lending data for May has just come out and I'm shocked in what I've found. New home buyers, owner occupiers and investor lending has had their biggest declines on record. That's right, on record. So all these articles coming out that first home buyers are surging, they're lining up in droves to purchase properties, it's all BS. And I'm going to break down the data and show you the truth. So new lending data for May has come out and we've seen the biggest falls on record. New lending for housing has dropped by 11.6%, with new loans for owner occupiers down 10.2% and new loans for investors down a huge 15.6%. So if you're thinking now is a good time to invest in property, well, the data tells us most investors don't think that's the case. Now, the Prime Minister, the Commander-in-Chief property spruiker, has come out and said, don't panic. The Australian property market fundamentals are strong and there's not been a lot of speculation in the property market in Australia. Well, I don't think that's the case. Why would you buy multiple negatively geared properties where you're losing, $500 a month if you don't speculate that in future the property prices are going to increase? The government and mainstream media have been trying everything they can to get first home buyers into the market because most of them get into the market for emotional reasons and not for investing. And even despite this, by the home builder scheme, first home buyers grant, no stamp duty, 5% down deposit scheme, where you pay no LMI, first home buyer lending is still down 9.3% in May. So despite all this, despite all the articles saying that first home buyers are surging, first home buyers are buying up bargain properties in droves, this is all propaganda. It's all to create FOMO. It's all to get you to make a decision without thinking. And this data proves that despite all these schemes, owner-occupier lending is still down. Now, refinancing has hit an all-time high, up 27%. And the reason for this is because the Reserve Bank of Australia has started something called yield curve control. That is where they buy 3-year government bonds to lower the yield on the government bond so the banks can borrow cheaply. So that way they can pass on the savings to customers. I've seen fixed 3-year interest rates at a low of 1.99% for Tasmanian buyers and as low as 2.06% for people in the mainland. Economists say that the restrictions on auctions and open for inspections has had a clear impact on the market, with demand for existing properties down 9%. So how will this affect the property market? Well, what we know is that easy credit and low interest rates is what drives the property prices, not just location. That is why in 2017-2018, we saw a big double-digit decline in property prices because the banks stopped lending during the Banking Royal Commission. At the end of the day, if you can't get a loan and you can't borrow as much, you can't buy a property or pay more for a property. And all the property spruikers and mainstream media has been saying how resilient the Australian property market has been. And that's because it's only been 3 months. And unlike the stock market where you can sell your shares instantly, property takes time for people to sell. They will go through hardship for maybe 3 to 6 months. They will and ah whether they're going to sell. Then they need to find a property agent, which can take a month. Then they need to create a selling campaign. Then they need to put on the market for a month or 2 or 3. And then they need to wait for it to settle, which can take 2 to 3 months. And then we need to wait for that data to become available. So it can take up to 6 months or longer for us to actually see the data from people selling in March. So I expect we won't see the big falls or we won't start to see the real pain until next year, where we have a lot of distressed property coming onto the market. The banks have also just extended their loan payment deferrals by up to 4 months. So that means that some people in hardship can not pay all the way up until March. So it seems like the banks and the government can just keep kicking this can down the road indefinitely. Who knows how long they can do it? And that is because the banks are trying to protect their balance sheets, because the more bad loans that the banks have, that means they actually have to have more capital set aside in case customers default on that. But right now, they can still have these loans where people aren't paying or deferring them as good loans. Sounds kind of like the housing crisis in 2008 in America. So if you're thinking of buying, this is not financial advice, but I would probably wait until mid next year, because that's when we're going to see a lot of distressed properties come on the market. And even if you don't time the bottom perfectly, what I would do to take advantage of the downturn, because like I said, property data lags. So if you wait until that you start seeing the data of property rising, that data is probably 3 months old and you would have missed the opportunity of the downturn. So mid next year, if property prices are still falling and you see that the falls start to stabilize, start offering people 20% below the asking price, or 20% what you think property, the fair value is. And that way you can still take advantage of the downturn and take advantage of people being desperate to sell. But if you don't time the bottom perfectly, you still got a margin of safety there where you've brought 20% under market value. Because nobody can time the market, but if you do secure a property 20-30% below market value, you'll be doing pretty good. Now, I don't want this channel to be turned into a doomsday. I just am a realist, and at the moment, property values are severely overvalued. And with the current fundamentals that are in place, with 3 million people on JobKeeper and underemployment nearly over 20%, that means people just can't buy properties and they can't get loans. And if they can't get loans, property prices are going to fall. Even though the unemployment rate is at 7.1%, the underemployment and real unemployment number is much higher than that. And that's why we've seen new home lending crash, even though that they're saying unemployment is only 7.1%. Because like I said, over 3 million people on JobKeeper. Also, the tools that they've used in the past to stop property prices falling severely, like lowering interest rates, has already been used. Since the 1990s, where the average interest rate was around 17%, and now it's around 2.5%, they've been able to drop those, which means people can borrow more. Because if you're paying 17% interest, there's only so much you can borrow, where if you drop that interest rate to 2.5%, you can borrow a lot more. And this is what has fueled property price growth, not just location. So guys, I hope this video was informative, and I hope it woke you up to what's really happening in property market. Don't believe what real estate agents are saying. Don't believe what realestate.com.au and Domain are saying with their articles. They have invested interests and they have their own agendas at heart. When you read an article or read something, you need to understand where it is coming from. Do they have invested interests? Do they benefit by you purchasing what they're talking about? So please, if it brought you value, please like for the whole YouTube algorithm, and comment your thoughts below. What do you think will happen to the Australian market? And subscribe for more awesome content on personal finance, property, saving and investing. I'll see you in the next one.